the code is meant to help you in real estate.
Really?
Yes, it is. It really is. Like, this is one of the places that you can get the most benefit by investing in real estate. So take the tax deductions. Don't leave them on the table, because you have so much opportunity.
All right, we're live. All right, guys. Well, welcome in. My name is Grace Shockey. This is Jessica Lawrence, and we are here to talk about Jessica's business, B&B Bookkeepers, and we're going to learn some cool financial tips today. So if that sounds like something that you're interested in, you better stick around. So Jessica, we don't know each other that well, but we had an introduction from Allie through REIN, that's Real Estate Investors Network, or Real Estate Investors of Nashville. If you guys aren't familiar with it, it's part of REIA, which is a greater real estate investment group in the United States. And yeah, long story short, we got an intro, and I want to know more about your B&B Bookkeepers business, because that's pretty much the only thing I know about you. I've looked at your website and, done a little digging, but tell me a little bit about how you got started in the B&B world and also in accounting and bookkeeping.
Yeah, absolutely. And thank you for having me, Grace.
Yeah, of course.
Excited to be here. So
we've got our Earl Grey tea.
Yes, we have our tea ready to go. So I've been in finance and accounting probably for over 10 years now. Wow. And really, always had a passion for finance. And so I've worked in corporate finance in the past with large businesses.
Were you in-house for them?
Mm-hmm, yes. Oh. Yeah. And then I've worked in lending for large banks before and everything. And so on that side, really worked with high net worth individuals and large businesses, and making sure that their financials are set to be able to apply for loans and things like that. And then I've also worked with some small businesses through a nonprofit. So really,
What nonprofit was it?
Pathway Lending.
Okay, cool.
Yeah, they're here in Nashville. But yeah, so the finance side of things, I've seen the corporate finance side, I've seen the lending side, I've seen investment side, I've seen personal finance side, and all the things that small businesses do right and also do wrong.
None of you watching do anything wrong, I'm sure. But you might want to just keep listening just in case.
Yeah. And so, there are some strategies that you'll notice like successful real estate investors use with their finances over and over again. And so my business really was started because I wanted to be able to help the small businesses get their finances set up the right way from the beginning, because so often, I see them a little bit later on in the process where
when it's a little too late.
Yes. Yeah, where it makes it harder to get lending, harder to really straighten things out. And so wanted to be able to help on that front end with businesses. And then, the reason it's called B&B Bookkeepers is because of my real estate side. And so I have a real estate business, and really started managing my own books with my B&B, with my long-term rentals.
I was going to ask you about your portfolio later, but since we're already talking about it, what does that look like? Is it just Airbnbs? Do you do long-term rentals? And at risk of starting a new rabbit trail, how did you get into that? I guess I'm curious.
Yeah. So I've done both. So I've had long-term rentals in the past, and that's how I actually got started. I didn't really plan on jumping into the real estate world. It just kind of happened.
Really?
Yeah.
That's so interesting.
Yeah. When I got out of school, I bought a property because I did know I wanted to invest in real estate. I knew the benefits of owning versus renting and building up equity. So I bought a property in Virginia, and in a place that I knew would also be fairly, rentable.
Are you from Virginia?
Originally from D.C., Virginia area.
Oh, cool. My cousins live in Falls Church.
Yeah. So Arlington, Virginia is where I was.
Yeah, it's a great area.
And so I had my condo there, and wound up moving to Belgium for a year and a half. And so became a landlord, rented out my property.
Kind of inadvertently.
Yeah,
oh, so cool.
That's how I got into it to begin with the long-term rental, wanted to keep my property while I was away, and, figured all of that out, but then also have done short-term rentals, and I have property down on 30A.
Oh, nice.
So in Florida, yeah. And so I've seen both sides of the long-term side and the short-term side and what that looks like for your books.
Do you have a favorite? I'm guessing no, but
it depends. It depends on what you're looking for. They both have pros and cons because, with your long-term rentals, once you have that contract for a year, as long as you have a good tenant, it's fairly low maintenance. Yeah. And so you just have consistent income that's coming in. So I think a little bit less profit with your long-term rentals, but also less work.
Right.
And then
they're paying your mortgage and, hopefully you have a decent margin, but even if it's not huge, that you're taken care of.
Yeah, exactly. Still covered.
Yeah.
But then on the short-term rental side of things, I do like that you have guests. And so, there's people that are staying in your house and they come in and out. So, unlike the long term, if you have one bad guest or one, they're there for a year. When you have short-term rental, they come in and out.
And you get consistent eyes on the property. Like, okay, yes, something broke this time, we'll fix it.
Yeah, so much more consistent feedback from our guests on what's going on with the property. So able to keep it nice throughout the year, have, everything updated as you go. But of course, also, the higher profit is great. There's more management involved, but there's a lot more benefits to it if you're looking, to build up some additional income. So I think that you need a portfolio of both. And we could throw some midterms in there too. But
I'm looking a lot into those right now. I've been learning a lot about them.
Yeah. And so that's where it's like, the biggest thing is you just get started with one of them and then go from there. But if you can build up a portfolio of both, it can help balance.
And you can kind of pivot as the market changes or economy shifts.
Yeah, especially if you have something happen with, one of your properties in the long-term world, then you've got some short-term rentals to kind of buffer it and vice versa, which we saw some of with everything that happened with COVID over the past couple of years. So that's kind of how I got into both real estate and like the accounting side of things.
And then basically, if I'm hearing this right, like the enjoyment of learning about all of these is being fused into B&B bookkeepers. You're like, I actually really like this. I'm passionate about it. I can tell that you care about it.
Yeah, absolutely. That's why I was like, I'm going to start with the accounting, on the real estate side of things, because we have so many people that are investing and getting involved in short-term rentals and long-term rentals.
Like by the droves. Yeah. There's a lot of people coming into this space.
Yeah, exactly. And aren't really sure what to do with their books. And so, that's where I'm like, okay, there's a couple strategies that everyone can apply to get started and really set yourself up to have a successful real estate business, because it is a business that you're setting up with real estate here.
Yeah.
And so that's one of the biggest things that I see, especially when investors are starting out, is kind of switching over into treating it like a business.
So what would you say are like the first 5 things that every new investor should do in the short-term rental or long-term midterm space?
Yeah. Okay. So
that might be a loaded question.
No, it's good. There's a lot of really good things that I would recommend, especially on the finance side. There's things that just on the real estate side as well. But
yeah, there's a lot. Let's talk finances. Financial tips, how to set your books up.
Yeah.
First, like 5 steps.
Yeah, so the very first thing is definitely treating it like a business. And what I mean by that is that you have separate financial accounts for your business or for your real estate property. So that means a separate bank account. That means a separate credit card. No commingling of your personal finances and your business finances.
I'm smiling right now because literally yesterday, so my boyfriend and I have an owner-occupied Airbnb, and yesterday Austin looked at me and was like, hey, can you go in and look at the, account, at the tax account in our Airbnb and tell me what it says? And then we realized that we had basically just set it up where it was auto-drafting to his personal account, and it was all mixed up. So guilty.
Yeah.
So I'm listening.
That is definitely one of the first things that we want to separate out. And it's really not too difficult to do with certain bank accounts like You can get a business bank account through something like Relay, but what's even more important is just that it's separate.
Right.
So for those of you that have properties, but you're like, oh, but I don't have, an LLC set up and a separate EIN. And so like, can I get a separate business account? And my answer to that is, it's okay if you don't have a separate LLC set up.
Like a business designation.
Yes.
But it can just be a separate account.
Just create a separate account. Yeah. Because what really the IRS cares about when they're looking at it is to see if you're commingling with your personal finances or not. And so when you have that separate account for your checking, for your credit card, they can see, oh, this is really all for business purpose. Okay. And there's this thing where they call piercing the veil. And so when you do have an LLC set up, you're trying to create like limited liability. That's why you set it up for the property. But if you're mixing your accounts, like you're mixing where you're spending between personal and business, you're piercing the veil. So there's no longer that liability, like limited liability. It's basically, the IRS can look at it and say, well, it looks like you're spending, in personal funds here too. So like, why shouldn't we then also go after your personal funds? So
that's a great point.
So basically what I'm saying is just create its own business account.
Okay, I'm running home and doing that right now.
Yes, yeah, it really will help you, and it honestly will help your sanity as well later. When you're trying to like organize and figure things out. It's so much easier to be able to see what's in the account, how much money you have that you can spend for the business, and then the way to solve when you're like, but I don't have any money over there in that account. Just do it with owners, basically contributions. And so it's just a transfer. Transfer the money to your business account and then spend within your business account. So anytime you have some expenses coming up and you're really going to wind up covering that with personal finances, just do the transfer first.
Got it.
Yeah.
Question.
Yeah.
We have been using a business credit card. Is that the same thing? Is that, where does that land?
Yeah, so I usually recommend you have at least one business bank account and one business credit card set up. So we want those to be separate from your personal finances.
Okay, so we had done 50%.
Yeah, so you're halfway there. You're good. And then eventually you can also create a reserve and tax account that's also specifically for the business so that you're planning for taxes at the end of the year and things like that. And also when it comes to real estate, we usually have CapEx and other improvements and things that we want to be saving up for. It's good to have.
What is CapEx? Oh, like cap reserves?
Yeah, like capital expenditures. So when you're doing like big improvements to the house, things like a new HVAC or, a new roof, things like that. If you're setting up a reserve, you can basically put money aside, like a savings account, to just prep for that. Yeah.
That's smart.
So between those, you're good with the credit card, then just a business bank account and a business reserve account, savings account. It can be any type. It can be an investment account, just as long as it's not mixed with your personal finances.
Makes sense. So is that all step one?
That's
or is
all
that
step one.
Okay, all right. What is the next step? What do people need to do after they get that all straightened out?
So the second thing that I recommend is checking out an accounting software and using an accounting software. So
such as?
Yeah, my recommendation is Quickbooks.
Okay.
I see often we get started in Excel.
I hear that a lot.
Did. Yeah, because when you're first starting, you're like, I got to kind of keep track of this. But you start out tracking it a little bit, and then you get busy with all of the other things that you're trying to manage with your property, whether you're long-term or short-term. There's a lot of other things going on, investing in new properties, trying to actually manage the property. And so the finances kind of get pushed to the side until the end of the year.
Which is kind of the whole point of having investments, right? It's to make money, but yeah, it's funny that we push that off.
Yeah, we want it. So we want it to be front and center when we're looking at our finances at the end of each month to see, hey, did we make what we thought we were going to make? Remember all those estimates you did when you bought the property and how much you thought it would bring in?
Correct?
Yeah, exactly. So I I really recommend getting into an accounting software, because although Excel is a great software program on its own, it is not the best thing to manage your finances, because you have human error when you're inputting things yourself, and there's just so much that you can categorize with an accounting software to help you save on taxes at the end of the year, and so you get to keep more of your money. And when you're trying to manage that, yeah, exactly. And so I would definitely say, get into an accounting software. There are different ones out there. They vary in how good they are. But QuickBooks is the best, I think, for having consistent connections to your bank accounts.
That's what I was going to ask about. It links, right?
Links, and it makes it really easy to actually track everything too, because when you do have a separate business account, you just set up that one business account with your QuickBooks account, your one credit card with your QuickBooks account, your one reserve account, and then you can easily see what's happening in the business.
Shows you your business's net worth and all of that.
Yeah, because the reporting is great. They're one of the best ones when it comes to actually being able to pull reports and pull them easily. Where I see some other accounting softwares where they have some reports, but it's not really easy to track, especially when it comes to real estate, because we often don't just have one property. There's usually more than one. And so you need to be able to have more advanced reporting to be able to track that. So
that makes sense.
Yeah. So that would be the second thing, is get an accounting software.
All right. Listening. I feel like we were supposed to meet. I need this. I keep thinking I need to get an accountant. I need to talk to a CPA. And I'm like, I'll just do it next year. And I've done that for the last 2 years. And the buck needs to stop. This is a sign.
Yes, well, you are not alone. It definitely happens, and it's okay. It's part of it,
Yeah.
It's one of those things where as you get started, you're like, okay, I got to figure out everything, and the finance and accounting is a big part of that.
Yes, it is. I have a question before we go to the third one.
Sure.
I feel like a lot of people are thinking, okay, this is going to be really expensive, or I just don't want to mess with that. I feel like that's just another expense that I don't need right now. But when I hear you talking about it, you keep saying save money, you can save on taxes, all of these things. I mean, it feels like it would work itself out, and I'm sure that's what you found, but how does that look?
So I definitely know what you mean, where it's oh my gosh, another thing to spend money on. I really don't want to have to spend more. I've already got enough expenses. But in this case, it is so important to know what's happening with your finances to be able to increase your profit, to be able to increase your cash flow, to be able to minimize your debt, to be able to save on taxes. So what winds up happening is, I see you kind of have two things that happen. Either you kind of get ahead of it and you're able to start tracking your numbers, and by tracking your numbers, save money and also limit your expenses, increase your cash flow.
That's an important thing. Because if you don't know what you're spending, you might be spending way too much on little gifts for your guests.
Exactly.
You can cut that down or somewhere else.
Yeah, because when you're not looking at the numbers, you're everything's important. I need to get all of it. But when you do have this sense of how much you're making each month, what your bottom line is, then you can see, can I really afford to have this property management software? Do I need to switch to a different one? How much do I need in supplies? Can I afford to buy the AC right now, or do I need to wait? Things like that. So inherently, just by tracking your finances, it will help you increase your bottom line. And so what I mean by that is your net profit.
Yeah.
Hopefully it's a profit and not a loss. That's what we want. But yeah, and then it will also help you in a huge way when it comes to tax time, because when you're tracking in an accounting software, especially one like QuickBooks, you have the ability to split out your categories similar to what they're going to ask for on your tax return.
Isn't QuickBooks owned by TurboTax? So I file with TurboTax anyway, so it just links all in there?
It links, yeah. And even if it doesn't, so here's a tip. Use the same email address.
I do.
For both. And if you do that, then it will link.
For when you do QuickBooks?
Yeah, for QuickBooks and TurboTax. You want the same email address because then it'll be able to just like link straight to it. But even if you don't have the same one, or if you have a different software, you'll then have your reports that you can just print out at the end of the year, and everything's split out by category, and it's so easy to just, this is my number for, supplies this year. And
yes,
you can track your travel, you can track your mileage, your subscriptions, like all of the things that tend to get lost and forgotten throughout the year, but can save you a lot of money. And really it's money that you're getting to keep of your own income.
Yeah.
And so as long as you are making a profit on your business, you want to take advantage of as many deductions as you possibly can. So yeah, starting with a, simple start QuickBooks account for $20 a month usually covers itself.
Makes a ton of sense.
Most often what I see is by the time people are looking for cleanup or help with some of their books, it's going to cost thousands to go back and clean up those books because it's such a mess. But if you get it set up and caught up like the right way from the beginning, it just will help so much.
Wow.
To your bottom
I feel like
line.
we're just there's just like truth bombs happening right now. We just broke through a bunch of objections and people, because I feel like when you think about it, you're like, oh, it's gonna be expensive, and you keep pushing it off, but you never even know how much it is, and you don't even know how much you're spending. I love everything that you just said.
Yeah.
That's amazing.
It really is more affordable than you think to get started.
Wow.
So.
Okay, boom. All right, so what's the third step? Third tip?
We've covered some of them. So let's see. The third one is tracking your financial statements. Okay. And so we talked about that a little bit. But the three that I want to talk about that are the ones that are the most important for you to know are your profit and loss statement, your balance sheet, and your statement of cash flows.
Okay.
And most often we've heard about the profit and loss, or it can also be called the income statement. Same thing. It's our income minus expenses, which gives us our net profit or our net loss. And sometimes you'll also know about balance sheet. That's the one where you have your assets, liabilities, and your equety. But the statement of cash flows is the one that gets forgotten about.
I've never heard of that.
So important. It's the most important one.
She's like, listen, people.
It is, because you don't have the full financial picture with just the first two.
Okay.
And so your profit and loss is showing your income and expenses throughout the month.
Okay.
So, how much money is coming in with rent, and how much money is going out with all of your spending on your expenses, right? So it's covering this full month period. The balance sheet covers one point in time, and usually we have that just be the end of the month or the first day of the next month, that sort of thing. And it's looking at, okay, how much do you have in assets, which is what you own. So like what's in your checking account. Then you have liabilities.
Does that also measure, sorry to interrupt, does that also measure like value of property? Do you do that?
Yeah, so your assets is going to include fixed assets, which is the value of the property, which you'll want to put in the amount that you purchased the property at.
And where you believe it is today, market value.
Yeah, so accounting's a little bit interesting, especially with real estate when it comes to that.
That might be a bigger can of worms.
Yes, it is. But to start off with, you'll just want to put in what the property was most recently appraised at, which is usually what you bought it for.
Okay.
And then the liabilities is what you owe. So that's what you owe on your credit cards. That's what you owe with your loans. So mortgage, that's where that'll go. HELOC, that's where that'll go. And so you're seeing this is what your assets are, this is what your liabilities are, and then what's left is the equity that you own in the business. And so when we talk about owner's equity, that's from the balance sheet. And assets, when we have assets, liabilities, and equity, they always balance. That's why it's called the balance sheet.
Makes sense.
So that is a point in time, profit and losses throughout the month. And your cash flow statement is the only statement that takes information from both of those statements to give you a full idea of what's actually happening with your cash flow. And so most often we kind of get into this habit of being like bank account financial managers where all you're doing is checking how much do I have left in the bank account. If there's money there, then I will do it. If there's not, then I won't when it comes to spending and buying and things like that.
Oh my gosh, it sounds so ridiculous when you say it, but I do that. Like that is so me.
It is. It's totally normal to fall into that, like, because you're just trying to figure out, okay, can I do this next thing? But when you have a cash flow statement and you're looking at it each month, you can see how your cash is moving.
Right.
And the reason this is so important for real estate is because sometimes we have a cyclical market. Mm-hmm. And so, especially when it comes to short-term rental owners, my property is at the beach. Mm-hmm. So it makes more in the summer than it does in the winter.
Right.
And so if I'm only managing with my bank account balance, then I could be spending all of that money that I made in the summer. And then by the time I need to pay taxes, I'm in trouble. Like if I don't have any money left, or if, that I do have the HVAC go, or I need to replace the roof, or, I have to replace appliances, like big purchases. Mm-hmm. And so this is why, the cash flow statement actually takes information from your profit and loss statement, which is all your operating activities. And then it takes investing activities and financing activities from your balance sheet. So you really can see, hey, how is my liquidity, which is really just my cash flow moving in and out of the business each month? And what do I need to plan for? What do I need to, prepare for when it comes to unexpected surprises in real estate?
Totally. So I'm guessing that you have you probably have something that you have a goal that you want to hit for reserves and all of that in your classes and your business. You kind of have percentages, or?
Yeah, I do. When it comes to like my properties, I want to make sure that I'm setting enough aside for taxes and for reserve. And so it really just depends on how new your property is. If you're going to have a big expense coming up. So like, for example, I knew when I got my most recent property that it was going to need a new HVAC. So I was like, all right, I got to put, 10%, 15% of the income straight into my reserve and tax account because I know this is coming. It's already old. It's barely hanging in there.
Yep. I actually just got one like that. It's a 1987 HVAC and it's still working, but I'm like, it's close.
Yeah.
It's coming.
Yeah. It definitely is one of those things where you're just like, okay,
any second.
I hope it doesn't happen right away, but sometimes it does. And so you just want to plan for that and start putting some money aside. So, depending on, what your property looks like, how much you're saving up to spend for the next year, the amount will be different. I would say at least put aside 15% to just be buffering yourself for taxes. I would also say it depends on how cyclical the business is. So with the long term, if you've got them for a year contract, you're not as worried about that cyclicality. Like
you might have 2 weeks vacancy.
So you want to for long term, you really just want to make sure you have enough to switch whenever you have to turn over tenants. So if you're like, I might have a month or 2 gap as I'm trying to get a new tenant, then you want to make sure you have that amount set aside. So not a percentage, but a dollar amount to cover that mortgage for the month or those expenses for the month. So it really does depend property to property how much you're setting aside. But when you're looking at your cash flow statement, you can see, okay, how much can I be pushing into my reserve and planning. And it gives you a full view of your finances.
I feel like if I had that, I could just kind of take a breath, knowing where I was and not having. I think a lot of us hold these places in the back of our heads, especially business owners and in real estate. You hold these places in the back of your head, to worry about your property or to worry about, the HVAC, the 1987 HVAC.
Yeah.
But it sounds like you are actually breaking it out into bite-sized steps so that it's not scary, so that it's something that what's happening, you're in control of it the whole time.
Yeah. I mean, I guess what I would refer to this as is like peace of mind.
Yes, when you, well said.
Yeah, when you know what's actually, by being able to see the numbers, you know what's going on with your business. And so then you're like, oh, okay, I'll be okay, for next month, or I'll be okay for the HVAC because now I've got some money set aside for it.
That's invaluable.
It really does just take like some of the stress off.
Okay, I love that. I hope people are taking notes. So that was kind of like steps 3 and 4?
I think that was 3, yeah. And then we talked about 4 a little bit, which is taxes.
Yeah.
And really taking advantage of tax deductions, especially because in real estate, like, the code is meant to help you in real estate.
Really?
Yes, it is. It really is. Like, this is one of the places that you can get the most benefit by investing in real estate. So take the tax deductions. Don't leave them on the table because you have so much opportunity. Mortgage interest is huge. Just that alone for some properties can totally take out, all of that income that you made, and so then you don't owe taxes. So I'm talking about thousands, like $5,000, $6,000, $7,000 in taxes. Yeah, that you can be saving. But
now, is this something that like anybody can just look up? And I guess a larger question is, do you start from the perspective of, I know this tax deduction, this tax deduction, this tax deduction, is there to be gained, and I will start spending from this like place of knowledge? Or do you go back on the back end and say, okay, I did this and this wasn't deductible and this was? Does that make sense?
Yeah. I think,
like, are you front ending it, or are you coming back and just like checking boxes and saying I did this?
So a little bit of both. So like, I have a course that I've created that helps you set it up the right way so that you can take advantage of the correct tax deductions in the beginning.
Cool.
So you do want to set it up. And when I say set it up, I mean your chart of accounts, which is the different categories that you have for those financial statements, so that you are taking advantage of the right tax deductions. And this is different for real estate than it is for just normal small businesses. And so that's why I have a course specifically for real estate, because it does look a little bit different.
Okay.
And it is a lot more specific, because our tax code with all like the guidelines and everything is like a 70,000 page document.
I mean, so I know I'm not going to read that.
No,
I'm just not.
That would take years.
So how can people find that? I think I saw it on your website when I was looking earlier. Is that the best way to get that?
Yeah. I have it on the website, which is bmbbookkeepers.com.
Okay, and we'll link everything too, so you guys can find it. Yeah, maybe you can send me the course, and then we'll link it for all the REN members.
Yeah, absolutely. And because that way you can really just like start off with getting your books set up correctly. And then we can talk about the second half, which is where you start proactively planning for your taxes and your tax deductions, and being able to take advantage in different ways. So for example, if you have a trip coming up, right? When you have a separate business account and a separate credit card account, you can then, plan for these trips with those accounts on the business. If you're going to a real estate conference, if you're going to a REN meeting, if you're going to a REN networking event where you get a meal, you can
corner pub. What's up?
Exactly. Yeah. So like every time that I go there, I get out my Quickbooks app and I take a picture of my receipt, and now I have it tracked, and it's so easy.
Wait, you put it right in the app? Okay, I didn't think it was possible for me to get excited about this, but this is actually really cool, because I literally just spent, 6 hours last week just combing through I do have a business credit card, but I combed through my business credit card, and then I realized that there were some things on other credit cards. So yeah, this is very exciting. Wow. Yeah. I hope everyone's getting jazzed up too. It's really cool.
Yeah, because then it makes it so much more simple. You don't have to have, the shoebox full of receipts that you're trying to track all year and then go find later.
You literally just take it with you.
Yeah, you just take it, like you take your phone, you take a picture, and if you have your Quickbooks app, it'll just link straight to it. One thing I will say though, make sure you take a picture of the whole receipt. because it's going to try and pull like the date and some other information from the receipt.
Okay, so just zoom out a lot.
Yeah, zoom out. Make sure you do the whole thing, because sometimes for whatever reason, like the date is at the bottom of the receipt or the very, very top, and you would miss it otherwise. But even if you don't have the QuickBooks app, honestly, just take a picture and then save all of it to a folder.
like one Google Drive.
Yeah.
This is actually really simple. This doesn't have to be complicated.
Yeah, because then what happens is at the end of the year, sometimes we're like, oh my gosh, it's tax season and I need to go find, a tax advisor to solve all of my mess. My tax mess. Right. But the thing is, tax advisors are really kind of just like doctors. Like, you go there and you give them the information that you have, but they can only work with the information that they've been provided.
Right.
And so where we can actually get ahead of it as accountants and as, like managing our books is throughout the year, keeping track of our receipts, throughout the year, keeping track of our travel and our conferences and things like that. And then you're just so much better set up to take advantage of those deductions at the end of the year. Because otherwise the tax advisor is like, okay, I'll work with what you gave me, but if they don't know, and if they're like, oh, I didn't know that you went to 12 REN meetings this year, and that, things like that, and went to all of these meals, and if you don't have documentation, that's where it gets a little bit,
hairy,
tricky when it comes to the IRS. Because here's a fun little fact. So normally when we are like going into, I guess like a court case or something like that, right? It's innocent until proven guilty. It is the opposite when it comes to the IRS, okay? You are guilty.
Like, seriously?
Yes, 100%. Like, you have to prove your innocence. So
really?
You are guilty until proven innocent. Yeah, so that's where people will say like, oh, well, they can't prove that I didn't have this as a business lunch. Well, they don't have to. You have to prove that it was a business lunch.
And how are you going to do that if you didn't? Wow.
Exactly.
That's interesting. So, like, going back to the receipt and the date, is the date important because you could show them this is the exact same date and time as this meeting that I said I was at?
Yes, because what happens in QuickBooks is when you have that receipt, you can then tag it to the transaction. So it'll automatically connect with your transaction from that date.
Wow.
And so this is why we need a software, because it makes it so much easier.
Oh my gosh. This is another mic drop moment. The mics are beautifully hooked up, so I can't. But boom. That's amazing.
Yeah. Wow. So.
Okay, so that's step 4.
Oh gosh. Yes. Okay.
I feel like we could talk all day.
I'll do one more.
Okay.
Please set up the reserve account, a savings account. That's step 5.
All right.
And I know I mentioned this a little bit earlier, but this is the number one thing that could either save you or break you, basically, especially when it comes to real estate, because we are playing with big purchases, right? When it comes to real estate, like there's some big dollar amounts on the table.
Yes. And
so really, please set up the reserve and the savings account.
She's begging you guys. Come on.
Yeah. I know it's like, it's hard to, because you're like, I want to go spend this money on other things. But like, I can guarantee you that something unexpected is going to happen throughout the year. I have no idea what it'll be. That's why it's unexpected. But I can guarantee something.
Pinky promise.
Yes. Yeah. Something will happen and you won't have been able to predict it. That's why it's unexpected. That's why it's a surprise. But it will. And you want to have that buffer for your business and for your peace of mind and your like financial safety to be able to recover. Because whether it's the HVAC or it's a tenant who isn't paying or
that just happened to my aunt.
Yeah.
Yeah. She was like 2 months in and they just stopped paying and it took like 3 months to get them out. Yeah. But these things happen. This is not a one-off scenario.
Right. Like it does happen and you just don't know. Like you could have a storm, right? And so like all of a sudden you've got water damage and so you're, a month without guests, things like that. Like I don't know what it'll be, but I know that something will happen.
Yeah.
So you might as well just protect yourself. It's for you, for your business to be able to really have long-term sustainability in this business. Instead of just like, I tried one and then something happened and then
I'm overwhelmed.
You have to go.
Yeah.
And the sad truth is I have dealt with a lot of businesses who have wound up going into bankruptcy. And
really?
And it sucks because I'm like, it's so avoidable with a little bit of help planning. And it's not because these businesses weren't good ideas or good services or good properties. It's almost always around the finances. And
why do we get there? Like, why do people avoid it? I mean, I said at the beginning of this interview, I've been avoiding it, but like, why do we do that? What is it?
It's honestly, it's just more reactive than proactive. And so because we have so much that we're trying to juggle, it's not top of mind. That's all it really comes down to is, I need to be planning for this. And so you just kind of go day by day and other expenses are always going to come up. And so if you don't plan to pay yourself and plan to put money aside in the reserve and plan for the taxes, it just kind of gets used up because we are constantly bombarded with other marketing and advertising that's trying to take our dollars. And this is both in business and in personal life.
Oh, yes. Preach. That's just living life in the 21st century.
Yeah. And so it just kind of happens. And so that's where we need to make that conscious effort to help safeguard our business. And the good news is that, it's once you put aside some of that money, you don't have to do a ton of this every single year. Like, get yourself a 3-month buffer, right? So check out how much you spend each month. And so set aside 3 months worth of that spending, those expenses. So let's say it's $15,000. Let's say it's $20,000. Once you've got it built up, you're good. You can start focusing on everything else. You can start doing your other improvements and investing in the next house. And
because it's not like you use that up all the time. That's just there.
Right.
Maybe it takes 3 years before you need to use it. Exactly. So you don't have to do it all the time.
Exactly. And so it's like, once you get it built, you're good for a little while. And, you can play around with this depending on what you do know is happening with your property, how old it is. If you just bought a second property, you can have a reserve set aside for that and have totally different amounts in each one, right? Like, just do yourself a favor and like plan for the unexpected. Have something. It doesn't need to be a ton, but just something to really help cover yourself. And I promise you, this is like one of the, I know I keep saying it's the number one thing, but this is
it's all the number one thing, guys.
They're all the number one. No, but it is one that I've seen either save a business or honestly break it, unfortunately. So,
which we don't like to talk about, but it does happen.
I know, yeah.
Oh, Jessica, I'm so grateful that you're like in this space. We need more people just talking. So thanks for coming on and sharing it with everybody. This is awesome. So I know we mentioned that you have the course. Yeah. So anybody can just log on there and start kind of learning all of these things?
Yeah, absolutely. So my course is about, helping you get set up correctly in QuickBooks, and, creating a chart of accounts that does match up with your tax deductions and what they have set up in TurboTax, so that it makes it so much easier when tax time comes around, either for you or your tax accountant.
Yeah.
But, so you can go to the website, and the course is on the website under the books and courses section.
Cool. Yeah, it's a beautiful website. We were talking about it earlier. Jessica designed it herself. A woman of many talents. And then if people want to work with you directly, how does that work?
Yeah, so I also have my calendar up on my website. And so if you're like, you know what, I've been trying to do this for a couple years and it is just not working. I'm focused elsewhere and I don't have the time to really be focusing on this. You just please help me and go ahead and take over. You could just set up a time on my calendar and we can chat and talk about different services. I do offer bookkeeping services, and those will include cleanup or catch-up services depending on if you're new to QuickBooks or you already have a QuickBooks account.
Makes sense. And is that just for short-term rental owners, or is that like anyone in real estate?
Yeah, so it's all small businesses, so short-term rental owners, but also other real estate investors if they have long-term rentals and things like that, as well as small business owners too.
Cool.
And then I also offer virtual CFO services.
What is that?
And so that's when you are kind of ready to grow your business. So you've had the business for several years, it's a little bit more of a matured business, and you really are looking for that proactive financial and business guidance on what to do next. So you're like, I'm thinking about hiring someone.
Does this make sense? Right.
Yeah, so we get into more advanced reporting, like, when we're doing budgeting, forecasting, any specific KPIs, being able to look at the different properties and which ones are making the most and which ones are making the least, and how to like evolve your portfolio, things like that.
That's super helpful.
Yeah.
That's really cool. Yeah.
Yeah. So that's kind of like the next step when you're like, okay, I really want to take my business to the next level.
Right.
So yeah.
Nice.
And those you can find them on my website, both services, and just set up a call with me and we'll just chat.
Cool. Couldn't be easier. Actually, last question on that. Do you work with individual finances, or do you only work with businesses?
So I only work with businesses.
Felt like there's a story behind that file. You're like,
Well, so I wrote a book specifically for personal finances.
Yeah, can you show everybody?
Sure. Where do I show?
Face your finances. There. Face your finances. Thank you, Grant.
Yes. So this is the personal finance book.
Okay, cool. So we should read that. All right.
Yes. If you're trying to get started with your personal finances, this is really all about how to manage your money, how to understand what your own personal financial picture looks like, and really just make it simple and straightforward. And this is under my maiden name, Jessica Rohr. I'm Jessica Lawrence now. But just so that...
Same person.
Yeah.
All right, we got you.
But
okay,
yeah,
cool.
because I'm passionate about finance in general, and so I want people to be able to understand their own personal finances, and it's such, obviously a personal topic.
Sure.
That, having the ability to just sit down and kind of go through it on your own at your own pace is really helpful. In your own home.
Yeah. Yeah. I can totally relate to that. I feel like similar to my Airbnb business and my other one, I'm like realizing that I don't have as good a grasp on my personal finances as I thought. You think if you're doing well, you're having a good year, it feels good, and then you look back and you're like, oh my gosh, I could have been way smarter about how I was spending or doing the deductions.
Yeah.
Like, I don't know. We could literally talk all day. I'm just thinking about random questions like, okay, if I wanted to go here on a trip, how could I turn this into a business write-off and all?
Yes.
We're going to learn all of this stuff from you
and
eventually.
You can.
Yeah.
That's the thing that's beautiful is like when it comes to certain real estate conferences, because we have real estate, we're able to then say, okay, I'm purposefully going on this trip to this conference using this travel and these travel meals, all business related. And so, that income that you're making on your real estate property, you can then write off for all these travel expenses. As long as there is planning and there's documentation, all of a sudden you've got so much more that you can do with your business income and your business expenses to really help both your business finances and your personal finances, because you're taking
and
it
your
off.
Quality of life.
Yes.
Right? Like,
yeah.
That's cool. You could actually be educating yourself more, go on trips, and write it off.
Exactly.
That's really cool. That feels like a magic wand.
It is. It really is one of those things where we're like, often really scared about like all the IRS code and like what to write off and what not to write off, and you do want to be writing off things that truly are business expenses,
right?
But it is designed to encourage people to invest in real estate, to build businesses. That's why there are write-offs. That's why there are deductions, is they want to encourage this, because we're helping build up the economy.
You're helping communities and families.
Yes. And so that's where it's like, they want you to do that. And as long as you do it properly, you have so much potential and opportunity to be able to continue to go to real estate conferences, to broaden your knowledge,
better
take
yourself.
Courses. Yeah, so things like courses are write-offs. Like, you can take those as write-offs.
Come on.
Yeah.
I didn't even know that. That is so cool.
I mean, if you buy a business book, you can also write that off.
You just got to Quickbooks the receipt.
Mm-hmm. Yep, exactly.
I learned so much today.
Yeah.
Wow. Thank you so much for sharing all of this with everyone. Yeah. I am like 5 mic drops in at this point. 5 mic drops up, guys.
Yeah, I mean, I'm very passionate about finances.
I can tell.
And I just...
You like glow when you're talking about it.
Yeah. Well, because I'm like, I just feel like it doesn't have to be as complicated as we think it is sometimes, because, financial advisors use all these fancy words and different terms and all this stuff. And I'm like, I promise it does not have to be that complicated. And, so my goals are to try and make it simple, straightforward, clear, to be able to take steps, because when you know your finances, your business will improve. And then, it's a better experience for your guests. It's a better experience for your tenants. It helps improve the community. Like, there's so many advantages along the way. Wow. Where it improves your life, it improves their life. So anyway.
Yeah, well, that's why you do what you do, and it's awesome to watch. So thank you so much. I appreciate it. Everybody go follow Jessica on Instagram. Do you have Instagram? Yeah. So let's see. My Instagram is JessLawrence424. We'll put everything in the. How about we put everything in the description? That way we don't have to remember that. Yeah. Go follow Jessica. Check her website out. Buy the book. Buy the course if you're interested. Hopefully you guys have all soared past this and you're doing your books correctly. But if I am an example of anyone, I definitely need to listen to you and probably have another follow-up conversation. So yeah, everybody connect with her, and thank you guys so much for watching. Thank you, Jessica.
Thank you so much. Appreciate it.
Bye, y'all.
Bye.